Anyone involved in FX dreams of becoming an octo trader, right? Speaking of FX octo traders, aren't you curious about the methods they use? I used to be extremely interested in the methods of octo traders. At that time, I met an octo trader and got to see their methods. So this time, I'll share my impressions from when I saw the FX octo traders' methods. What kind of methods do FX octo traders use? When I happened to meet an FX octo trader, they showed me their methods, which were a combination of a standard trend-following method and a short-term counter-trend method. Moreover, these two methods were unbelievably simple. The standard trend-following method, for example, involves buying at the yellow circles on this chart. As you can see, it's a straightforward trend-following dip buying strategy. I was skeptical at first, thinking there's no way such a simple method could be successful. I believed that successful traders must have some secret, but when I saw them actually trading, it was true. They didn't even use moving averages or other technical indicators. They traded aggressively using only horizontal lines and chart patterns. The secret was in adding to positions. While using a simple method, they kept adding to their positions. For example, they would start with one position, and if it became profitable, they would buy more at dip points. As profits increased, they continued to buy more at dip points, and finally, they would take profits when the chart extended. Seeing this, I realized that this method could indeed be profitable. I thought, this must be why they can make so much. This person would start with 1 million units and keep adding until they were trading over 5 million units. They would take profits of 200 to 300 pips, making over 10 million yen in one trade. Doing this once a month would result in significant earnings. The amazing part of this method is its high reward to risk ratio. For example, if the initial 1 million unit position went against them, they would quickly cut losses, usually within 30 to 50 pips. But when taking profits, they would have increased their position to 5 million units and take profits at 200 to 300 pips. This means that when they cut losses, it was a loss of 300,000 to 500,000 yen. But when they took profits, it was a gain of 10 to 15 million yen. This method was incredibly profitable. They applied this method to various currencies, resulting in unbelievable profits. It's easy to imagine becoming a successful trader with such a method. However, they mentioned that not every trade ends with such results. Often the rate would reverse while adding to positions, ending the trade. They said that squeezing out profits until the end happens only once or twice a month. Even so, making over 10 million yen in one go once or twice a month means earning over 100 million yen annually. The trend-following method of FX octo traders is quite ordinary, but their position management was exceptionally skillful. Next, the short-term counter-trend method of octo traders was also simple. They would simply counter-trade when volatility caused strong price movements. This was more like scalping. Regarding the counter-trend method, they would quickly take profits at the peaks without extending them. The impressive part was entering with 5 million units in one trade, consistently making around 500,000 yen in profits. The accuracy of their counter-trend points was very high, with almost no losses. Even when they did cut losses, it was always within 5 pips, making the counter-trend method highly profitable. When I saw this, they were making 1 million yen a day with just the counter-trend method. The scary part was that after profiting from the counter-trend method, they would switch to the trend-following method when they judged the trend had changed. This allowed them to capture profits from the start to the end of a trend. There's a saying in the market, leave the head and tail, but they said the head is also nutritious, so they would take it all. Seeing this, I realized that the method itself could be simple. The difference was their exceptional market sense, allowing them to time position increases perfectly. Also, their ability to confidently trade large lots was on another level. The result of imitating the octo trader's method was the method of the octo trader I observed was so simple that I thought I could do it too, so I tried to imitate it but ended up losing badly. Even with a simple method, if you can't accurately grasp the overall flow, judge the strength of support and resistance, or understand the flow when creating dips and retracements, you won't get results. At that time I didn't understand these things, so even with simple dip buying or retracement selling, I was making losing trades. That's why I couldn't win by imitating them. Creating a method involves trying various things, and seeing the simplicity of the FX octo trader's method was shocking. The person said that it's good to experiment with different methods, so I should try various things. They also tried many methods before arriving at that simple one. It's what you call a holy grail search. Searching for the holy grail of methods in FX might seem futile, but by experimenting, you end up with mostly unusable methods. This can lead to wandering, but if you continue, you'll eventually find a usable method. That method turns out to be simple. So, searching for methods is actually beneficial. I found this to be true for myself. When I couldn't win in FX, I would try different methods, and if they didn't work, I would quickly discard them and search for the next one. I repeated this endlessly, taking many detours, but eventually I arrived at a trend-following dip buying and retracement selling method. This is a method you learn when you first start FX. I thought I should have used that method from the start, but at the time, I believed successful FX traders had some secret, so I couldn't bring myself to use a simple method. In the end, trying various methods helped me find one that suited me, so I think it's okay to wander in search of methods. However, it's important to thoroughly test any method you try. If you do it like I did, trying a bit and then moving on, you'll never find a method that suits you. It's by thoroughly testing that you find a method that works for you. It's the same with anything. Experiencing and understanding it yourself is the best way. What is the life of an octo trader like? When you think of an octo trader's life, you imagine it must be great, right? Of course, some people live like that, but the person I met lived a completely ordinary life. They had a family, and their house was bought with money earned from FX. Other than that, everything was normal. When dining out, they went to regular restaurants, and their wife usually cooked at home for the family. They had a very normal sense of money. Is this what the life of an FX octo trader is like? I felt a bit let down. However, they liked cars and bikes, so they built a garage and bought old cars and bikes to tinker with. That's about the only thing they spent money on. They didn't live in a luxury tower apartment or eat out at fancy places every day. This varies greatly from person to person, but the life of the octo trader I met was as ordinary as their method. Also, they said they don't trade at all in August because it doesn't suit them. During that time, they travel to meet people and drink all month. It's amazing that they can earn so much without trading for a whole month. I was envious of this. In summary, I've shared various insights about the FX Octo Trader's methods. The method of the Octo Trader I met was quite ordinary. At first I thought it was definitely a lie, but seeing them actually make money, I realized that even simple methods can be effective. However, their position management was exceptionally good. So this experience taught me that even with a simple method, if you manage your funds and positions well, you can succeed in FX. See you in the next video. If you found this helpful, please like and subscribe.